Good morning. It's Wednesday, the 22nd of May, and this is Govindraj Ethiraj broadcasting and streaming from and headquartered in Mumbai, India's financial capital. Our top stories and themes for the day. The 5 trillion stock market capitalization mark finally arrives. What's next? The tug of war between institutional and retail investors is taking interesting turns. Oil imports from Russia hits a 9-month high. The government wants public and private refiners to gang up for better prices. India is still holding out on steel import tariffs, even as several Latin American nations have hiked them to fend off cheap Chinese exports. India's spice exports controversy. Why is it dragging on? Heat waves are rising and so are threats to lives and livelihoods. Dubai Airport is set to see over 90 million passengers this year, a record. And an exit poll by independent journalists highlights jobs and incomes as key issues in their voting decisions in Maharashtra.
This is a core report with Govindraj Ethiraj.
The $5 trillion mark is here. Frontline and index stocks continue to trade narrowly as election fever continued to grip the stock markets. The broader market continued to expand, taking the combined market capitalization for BSE stocks over the $5 trillion mark for the first time. Institutional investors are ringing alarm bells once again, and more on that in a moment. On Tuesday, it was a largely flat trading day with the BSE Sensex ending at 73,953, down 53 points, while the Nifty 50 was at 22,529, up 27 points. So another day of divergence between the two and another sign of the tug of war, a silent one, going on in the market. The market capitalization of all the companies listed in the BSE hit that $5 trillion mark intraday and stood at $4.97 trillion at close. If you've been listening to the core report, we've been predicting this figure would arrive, though it seems to have arrived a little later than sooner. Not surprisingly, that 5 trillion mark was boosted by a spike in the mid and small caps over time, with the BSE mid-cap index on Tuesday adding about 0.3%, though the BSE small-cap index fell very marginally. Now, the interesting thing is, of that $5 trillion, some $1 trillion has come in less than 6 months in a journey that began on the 29th of November 2023, according to the Economic Times. So the next benchmark is obviously, once again, all-time highs. But as we told you yesterday, there are all-time highs being hit all over the world, almost, at least in major markets, with 14 major world capital markets at all-time highs or close to it right now. The institutional retail tug of war. Now, there is a tug of war going on in the markets. It's perhaps a little silent, but it's between retail investors who are actually staying put or continuing to pour in money versus the institutional who are sounding the alarm bells. Kotak Institutional Equities, in a note, has cautioned that valuations of numerous Indian companies are unsustainable. The domestic brokerage pointed out that 104 companies are trading at over 50 times price-to-earning ratio, while 9 companies were trading above 100 times price-to-earning ratio. Now, what does that mean? It means that a company with 100 times price-to-earning ratio would need 83,000 times earnings in the 100th year to justify its current multiple. Many of these high PE companies are in traditional sectors and could face significant disruption risks, Kotak said in a note reported by Money Control. So what it means is that potentially that if you were in a tech company or a really high-tech company with potential that was really difficult to imagine at this point, then you could dream of such price-to-earning ratios, but surely not in a traditional company or a sector. Kotak says that it's also observed a disconnection between valuation methodologies and fundamentals, making high multiples acceptable despite the underlying parameters' outrageous implications. Even excluding young companies and industries, the number of high PE companies remains elevated, Kotak says. Now, there are some more numbers, so I'll go slowly. Kotak says that companies will require sharper and higher growth rates over a shorter period to justify these very high PEs. A 100x PE company, which may be in the growth phase over the next 40 years, will need to report an earnings compounded annual growth rate of 20% over the next 20 years and 9% over the subsequent 20. Now, all of this I know sounds very far out because I don't know how many of us are going to be around and in what form. Anyway, so Kotak says that if the industry's growth phase were to be shortened by 20 years, the required growth rates would be even higher. Even if we assume stable market structure and stable profitability, that particular sector will then require becoming 200x in the first scenario and 30x in the second one. Only a few sunrise sectors may pass this small test, Kotak said in its latest note. Now, all of this is, of course, Latin and Greek to any investor who mostly has no clue or actually wants to have no clue either on whether a stock price should reflect some fundamentals or whether there is such a thing called fundamentals. On a somewhat related note, Goldman Sachs has said that stock investors are bracing for a spike in market volatility, and upcoming events such as Nvidia Corp's earnings report can exacerbate any moves. The reference here is to US markets, though trends can mirror themselves quite quickly across the world and in India. Bloomberg has reported that the bank's measure of risk appetite hit the highest since 2021 last week, driven by optimism around economic growth and monetary policy, but momentum has slowed. Data from Citigroup, meanwhile, showed a rise in bullish positioning levels in S&P 500 and Nasdaq 100 contracts last week. It says the S&P 500 is now almost exclusively one-sided, which means there are mostly buyers. But profit levels are only beginning to develop, which limits positioning risks, a Citigroup strategist wrote in a note reported by Bloomberg. Now, if you want or are looking for bullish cases, this is surely one of them. The strategists also point to the CBOE Volatility Index options data that signals higher demand for hedges against sudden market declines at a time when the gauge has dropped to historically low levels. This suggests markets are pricing less risk of a sustained drawdown from here, but are worried about temporary spikes in volatility, that note said, which comes back to our original point about volatility, whether it's in the United States or Wall Street or in Dalal Street right here. Oil prices stay steady. India and Russia are at play. Oil prices were lower on Tuesday, with investors now betting on continued US inflation and higher interest rates keeping consumer and industrial growth down. Brent crude futures were down about 57 cents Tuesday to about $83 a barrel. India's Russian oil imports have now risen to a 9-month high in April after shipments on non-sanctioned tankers operated by Russia's largest shipping company, Sovcomflot, resumed, according to tanker data that Reuters has looked at. Refiners in India had briefly stopped importing Russian oil in tankers belonging to Sovcomflot after the company's ships, along with its 14 tankers, were designated by Washington in February as being in breach of Western sanctions, which, as you know, have been in place since Russia invaded Ukraine now 2 years ago. India is the world's third biggest oil importer and consumer and is the top buyer of Russian seaborne oil. Interestingly, the government of India has also asked both the state oil refiners, that's BPCL, HPCL, and Indian Oil Corporation, and the privately owned and run Reliance Industries to jointly negotiate a long-term supply deal with Russia, says Bloomberg. The government apparently wants India's refiners to lock in at least a third of their contracted supply from Russia at a fixed discount to contain volatility in prices. That appeal to join forces was informal, says Bloomberg. Now, this would, of course, be interesting to see how it plays out if it does, because Reliance is not likely to share information on transactions or be present on the same table along with the state oil refiners because they all compete quite viciously in the market. More countries hike tariffs against Chinese steel. Indian steel manufacturers are crying out for more tariffs against Chinese steel ever since the United States hiked tariffs, and good chunks of that production, instead of going to the US, are now seeking newer or, for that matter, more traditional markets like India. Last week, the Indian Steel Association, which represents most large Indian steel companies, said they were worried about a surge in shipments from China after the United States imposed those steep tariffs on Chinese steel. The government in India is, of course, caught between keeping steel makers happy and feeding the massive appetite created by the infrastructure investments that it itself is leading. However, it now appears that other countries are hiking tariffs against Chinese steel. Bloomberg is reporting that Mexico, Chile, and Brazil have hiked and in some cases more than doubled duties on steel products from China over the last few weeks. Colombia may be about to follow suit. Now, this is interesting because China is also a big buyer of raw material from the region and, of course, a major investor. At the same time, Latin America has given China another market to sell its goods as it faces stiff US and European tariffs. China sends nearly 10 million tons of steel a year, valued at about $8.5 billion to Latin America, which is a big jump from just 80,000 tons in 2000, according to Regional Steel Association Alacero, reported by Bloomberg. A flood of Chinese imports that threatens to put Latin American steel producers out of business could also risk something like 1.4 billion jobs. Countries like Chile have, among others, benefited from two-way trade with China, including exporting raw lithium for battery components and, of course, wine. But the tide is turning. Spice exports, the real story. The Federation of Indian Spice Stakeholders has said India's spice exports may decline this year by even 40% if the issue of ethylene oxide or ETO contamination in spices meant for exports is not addressed at the earliest. Now, there are different levels for ethylene oxide for different countries, but the present controversy got triggered after Hong Kong and Singapore banned the sale of popular brands Everest and MDH after detecting carcinogenic chemical ethylene oxide in their products, leading to a mandatory recall from shelves, according to Wire reports. India's spice exports, by the way, total about $4.75 billion, which accounted for 12% of global spice exports. I reached out to Tejas Gandhi, Secretary of the FISS, which represents some 600 spice traders, exporters, and farmers across India, and based in Unja, the biggest spice trading market in India, and located in Mehsana district, some 100 kilometers north of Ahmedabad. I began by asking him to give us a status update on the situation, something the core report had not reported on earlier, and also an explanation on why this had become a problem and if he was seeing or predicting normalcy in coming months.
Be very honest, the ETO thing has been blown out of proportion by certain media. It is not as serious as it has been projected to be. And regarding the Singapore and the Hong Kong issue, let me clarify one thing, that none of the brands were bad. There was a product recall and they had replaced the product. Now, India exports about $4.7 billion worth of spices every year. And there was, recollect correctly, it was about 50 kilos in Singapore and just 25 kilos in Hong Kong. Now, as far as the Hong Kong situation is concerned, Hong Kong does not have any specified limits for the treatment of ethylene oxide. So that is where everything started. Number two, in Singapore, it was within the permissible limits, but because Hong Kong did it, Singapore had to do it. There could be various factors about it. Products have been replaced. They have sent more consignments, as well as to the Everest and MDH have sent more consignments to Singapore and Hong Kong. Their products have been replaced. The ethylene oxide, if we go by it, it is not that carcinogenic as it is predicted or projected to be. USA has a limit of 7 ppm. Singapore has a limit of 50 ppm. Canada has their own limits. So every country in the world has their own limits for the treatment of ethylene oxide. Now, as far as India is concerned, ethylene oxide in India neither registered nor used as a pesticide. It is only used as a sterilizing agent and as a fumigant to kill the microbiological contamination. I mean, I'm sure everybody who would be in the industry would know microbiological contamination like Salmonella, E. coli, Eastern mold, and Enterobacteria. There is all microbiological contamination that harms your body. Ethylene oxide is permitted in several countries around the world. Every country in the world, they have their own limits to be adhered to, and which the exporters are adhering to. Now, since this thing broke out in the media, there was a lot of haywire things that were being said about the Indian spices and all. Let me assure you, Indian spices are the most safe and the most tasty, and they have the most aromatic things in the world. India controls about 70 to 80% of the world's spice market. It even not only controls, it even produces. So the industry is very well aware about what to do, for whom and when. Now, as far as things stand today, exports are going on, and we have requested the authorities not to take a very rigid stand. To take a stand, earlier on, there was news that, only ETO-free spices would have to be exported. But we have requested the authorities, our nodal agency is Spices Board, that, in countries where it is permitted, why disallow it? So all our associations, all our spice trade associations, we've got together, we've requested them, and they are adhering to our request. And at the moment, there is no ban on the exports as such.
Got it. So now, in the total overall export basket, how big was or is Hong Kong and Singapore?
Well, Hong Kong and Singapore, they don't control much of the entire thing. I mean, Singapore is a transit to other countries. Their own market is very, very small considering the population and the size of the market. Hong Kong as well, the same. Singapore has traditionally been a transit market other countries.
So does a ban, even if it's on a particular consignment, affect transit shipments, or is it affecting only shipments that are meant for local consumption? Or is it because stuff in there is bought?
See, what happens is, suppose, for example, if Singapore has a limit of 50 ppm and USA has a limit of 7 ppm, so when we export goods to Singapore, we treat it according to 50 ppm. And if that particular consignment is exported to USA from Singapore, nobody in India is aware. That could have been one issue, but products have been recalled and products have been replaced.
Got it. So when we replace products, I have two questions now. Are there specific spices that were more likely to have had this higher level of ethylene oxide? That's one. Secondly, when we say that we are replacing it, which means that we had stock of spices which were not exposed to this, or how did it work?
When they say in any country around the world, if the products go and they are not they say it is, when they say it is not according to their own standards, they ask for a replacement of the product, which is either treated according to their norms or which is not treated. So when goods leave India in any form, I believe Everest and MDH, the issue was that the blends were recalled, not any whole form or powdered form. They were blends, right? So that could have occurred in any product. I mean, it's just a replacement of the product. The product that is replaced could go to another country where there are specified limits or higher limits of ethylene oxide.
So my question is also on the production side. So when these spices are produced, I mean, they are at some point either in the plant form or natural form. How does one control how much ethylene oxide is, let's say, administered to one batch versus the other?
No, ethylene oxide, I'll tell you, it even occurs naturally in the product, in the farms. And that is very difficult to get away with. And also, ethylene oxide, when treated, you have those computerized chambers and this thing for special treatment. They're treated in very, very high hygienic environment. There are special companies that do it for us. And they are very well aware of the pros and cons of what they are doing. And we have to tell them it is going to so and so country, and they treat the product accordingly.
So are you getting spices into your factory, processing it further, then packaging it and exporting in a branded way? And the blending, of course, which I guess is the critical part. Or is it that you're also maybe growing some of those things yourself?
No. We are traders. I mean, we have, our FPOs working, but not everybody treats the product with ethylene oxide. It is on the request of the buyer and on the request of and on the permissible limits of the country.
Got it. Okay. How are you looking at this ahead? If you look at, now that you're saying, those consignments have been replaced, appeals have been made, what is it looking like now? Is you feel that things will return to normal or normal level of exports and imports from their side in coming months?
Yes, in the coming months, they should return to normal. We only request the authorities not to put stringent norms on exports from our end. Since a couple of countries or maybe 3 countries have raised certain concerns, I think that should not deter us from putting more controls on the exports. The only reason being that treatment is allowed in certain countries.
So you're saying your concern at this point is more FSSAI, let's say, controls here in India rather than what the importing country might say or not say?
It's not the FSSAI, it's the nodal exporting agency, that is the Spices Board of India. In case they come up and say they were, when the thing was blown out of proportion, they wanted us to export goods without ethylene oxide. When you don't treat ethylene goods with, either steam sterilization or ethylene oxide, there could be a lot of other issues on microbiological contamination, which could harm the body more and which maybe could affect our exports, because if there is a presence of microbiological contamination, a lot of countries would not accept our products.
I'm assuming you're also supplying to the domestic market apart from exporting. Is that correct?
Yes.
And how are things on the domestic market? What is the current level of ethylene oxide allowed? Is there any issue there at all?
Earlier, the limit for ethylene oxide in the Indian market is 0.01 ppm, which has been revised by FSSAI to 0.1 ppm. But we are still in talks with the authorities. I wouldn't, on the domestic front, I wouldn't like to make any comment on this. We are still in talks with the authorities to raise the limit or find alternative ways and methods of eradicating the pathogens.
Tejas, thank you so much for joining me.
Thank you for having me on your show.
Heat waves are rising in number. Elections are still on, and more on that shortly. Meanwhile, India is continuing to issue weather alerts and is warning of even hotter conditions ahead as deadly heat is sweeping many parts of northern India. The heat stroke risk is very high in Delhi, Rajasthan, Punjab, Uttar Pradesh, and Haryana, and people should avoid spending time outside. A bulletin from the Indian Meteorological Department that carried the so-called red alert said and was reported by Bloomberg. By the way, India's highest recorded temperature on Monday was 47.4 degrees Celsius at Najafgarh in Delhi, according to the IMD. So the weather has been about 5 degrees Celsius hotter than normal in several parts of India, and the heat is expected to continue in the northwest and central region over the next 4 days. The world at large posted its 11th consecutive month of record-breaking heat in April as climate change triggers more extreme weather across the world. Elsewhere, the Weather Bureau has also predicted heavy rainfall in Kerala, Karnataka, and Tamil Nadu, advising fishermen not to venture into the Bay of Bengal. We are, of course, on the 22nd of May, and monsoons should hit literally in a week's time in the southern part of India, being in Kerala. Elsewhere in the world, temperatures have climbed to record highs in parts of Thailand and Philippines, while heat waves hit parts of major coffee grower Vietnam, sending prices of the Robusta variety to a 45-year high, according to Bloomberg. Dubai posts record traffic. Dubai International Airport has posted its busiest quarter in history this year as people obviously continue to travel, receiving over 23 million passengers, up about 8% in the first quarter compared to the same period last year, the company said in a statement reported by Reuters. The company also told CNBC that they were on the road to 91 million passengers going through by the end of 2024 and for 2024. And now Dubai Airport expects passenger traffic to surge to a record 100 million by 2027 or in about 3 years' time. All of this was because of increased destination offers by flagship carrier Emirates and its sister low-cost airline Fly Dubai. How are Maharashtra's voters voting? A sample of over 2,000 people exiting polling booths surveyed by a group of volunteer journalists led by Arun Anandagiri, founder of Taxotra, says that in many cases, people's financial positions have either worsened or remained the same. Now, this may or may not determine voting choices, but is an important input. The poll asked people what their main economic issues were and also if their financial position had improved, worsened, or was the same in the last 5 years. The poll was conducted at exit points in rural and urban Maharashtra, including in Mumbai. I caught up with Arun to give us some more details on the percentages that he was seeing for the data that they had collected so far.
Usually people do an exit poll, straight ask a question, whom have you voted for? And that's the easy way of doing it. But I've always believed, in the last 20, 25 years, I've done exit poll only and only as a passion, that it helps if you find out what the motivation is to vote and what are the issues. That's a soft question before lobbing the hard one, whom did you vote for when you ask? So we asked a question to voters in rural Maharashtra, in cities here, in Mumbai, etc. Over the last 5 years, has your family's financial position improved, worsened, or is the same? And the reason we ask this question is just to understand, before arriving at the final outcome as to whom they are voting for, their voting intention, whom they have cast their vote for, just to see from the prism of whether they're saying it's improved, the financial position has improved financially, are they therefore voting for the ruling bloc, or if the position has worsened or is the same, they are going for the opposition. So, it's just trying to make sense of data, Govind, and of course, also to understand how people are feeling in terms of their economic situation at present when they're going to.
Now tell us what your key findings are.
The sample size roughly so far, and we are still doing it in several cities and villages. Lots of villages we've picked up in Maharashtra. And I think by the time we finish the sample, be over 5,000. Right now would be around 2,000.
Okay. And what are your key findings, Arun, at this point of time?
At this point of time, across villages, small towns and big cities, at least over 60% of voters whom we asked this question on their family's financial position, over 60% said that their family's financial position has either worsened or is the same over the last 5 years. And I'll just give you some tidbits. For example, closer home, Dharavi, the largest slum in Asia, we asked this question a couple of days back. From our sample, a smaller sample, but 79% of the voters we sampled said that their situation has either worsened or is the same. Almost 50% said that the situation has actually decreased, has actually worsened over the last 5 years. We asked the same question in Dadar, heart of Mumbai. And there again, 65% of the voters we surveyed said that their financial situation has either worsened or is the same. And when you went to rural Maharashtra, I thought the situation was actually, the numbers were slightly better. For example, take Bhor, which comes under Baramati Lok Sabha constituency. It has over 200 villages, and we sampled around 10 to 12 villages there, Govind. And roughly 60% of the voters we surveyed said that their situation has not improved over the last 5 years. So or even Daund. Daund is a junction, it has a big railway station en route to Solapur. And when we asked this question in Daund, again, you got the same answer. Around 65% voters saying that no, our economic situation has not improved over the last 5 years.
Yeah, Arun, you're saying that the other 40% things have improved?
Say 30 to 35%. Around 5 to 7% voters would say that they're not sure or would not have responded to that question.
But 30 to 40%, depending on which place, are saying that things have improved. But things have actually improved.
And you can make that direct correlation, Govind, to their voting intention. And number two, if people are saying that the situation has worsened or is the same, that does not necessarily correlate to their voting intention.
You're not seeing any split in behavior between non-agriculture and agriculture respondents.
I'm not seeing a big split. The deeper you go inside the villages, the more likely, people are going to say that the economic situation has worsened or is the same. We asked this question in Marathi and we asked, तुमच्या कुटुंबाची आर्थिक परिस्थिती मागच्या 5 वर्षात सुधारलीये, घसरलीये का तशीच आहे? Just translating that same question from English. This is exactly the question that we asked.
Yeah, but Arun, could that be a slightly leading question? I mean, suppose you said, how are you feeling, as opposed to saying, have things worsened or improved?
Not really, Govind. I think it's a question. I thought you're giving option rather than in the US where they ask, the Bill Clinton famously asked that question 92. Are you better off than you were 4 years ago? Now, that is very, very subjective. There are so many factors. But here, we zeroed in on asking your family's financial position. And before that, we asked 2 questions leading up to this. One, what is the main issues for you? And we found that the 75% of the respondents said the main issues for them were price rise, unemployment. One of the two or both. So this was one of the key questions leading up to the financial position question.
And price rise and unemployment was consistent in urban India as well? Or other Mumbai city and so on?
Absolutely. In urban Maharashtra, a higher percentage saying unemployment.
Are you expecting any changes or shifts in the kind of responses you get as we go into the next phase, the last few phases?
We should, because we've really taken up rural constituencies, Govind, over the last 4 to 5 days. So maybe if we do another short podcast in another week or so, you'll get a bigger sample, predominantly from rural Maharashtra.
Right, Arun. Thank you so much for joining me.
Thanks, Govind. My pleasure.
That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in. And thank you once again for listening.